Good evening, everyone. Yeah, this is Closing Bell brought to you by Stocker Team, StockerTeam.com. You're welcome. Here is another episode of uh, the Closing Bell on today, the 28th of August, 2026. And I'm here with my co-host, also co-founder at StockerTeam.com, Kenny. And we are going to have an action-packed, edition today, and we'll get into that right away. So, Kenny, how's your week been so far?
Yes, thank you, Sam. My week has been eventful. All highs on the stock market, all highs on the Nigerian stock markets too. My favorites have been doing numbers. So my week has been very, very eventful. Major headlines happened that really gave me joy. In the stock market. The week has been lovely for me, to say the least.
Yeah, so we have an action-packed edition and episode today. So, Kenny, we are going to go through, the top news that actually, moved the market this week so far.
Yes, yes,
From
yes.
Monday, we've seen several news, both from Wall Street and also on the U.S. Stock market. Maybe we can just go down the news trail. We go as far as Monday. So I'm just going across and we'll take the first news and I'll actually be making comments. So the one
Okay,
that
I
I
have
really
some
want
for
us
here. Okay.
to, yeah, go on.
I've
Let's
got
take a
some.
lead.
I've got some for you here too, Sam. Because they interest me a lot. So I think the week kicked off with you know, the U.S. Canada trade tensions. I've
Yes,
been
yes,
following. I've been following the Trump Carney issue for a while, but this week we got it with a new dimension in the U.S. Canada trade tension, and it actually returned to the Wall Street radar. So I would like to ask you, what's your take about this U.S. Canada trade tension? Is it weird that the U.S. is kind of waging a war against its neighbor because we're used to the U.S. China trade tension to trade war? What do you think
yes.
about the U.S. Canada trade war, and why do you think it's a dynamic one?
I just think it's momentary. And when I meant momentary, the US, Canada has always had a very cordial relationship up until recently when we had President Trump, whose modus operandi is a bit different. He believes that he needs to make deals, especially trade deals. And if those deals do not necessarily turn out to be what he has actually touted to get, he actually goes around to escalate and he tries to escalate to de-escalate, and if anyone is also putting it up to him by not de-escalating, then he escalates again. So and he wants to de-escalate after escalating. So we've seen that banter between Canada and the US, and that has really, really not been good for the stock market, especially the Canadian market. But fortunately for the Canadian market, I want to point out something very instructive. The Canadian market hasn't done so badly. In fact, TD, Toronto Dominion, one of the stocks in the Stockholm Index, which is tracking the Stockholm portfolio, I think has done well over 40% this year. And if you check the Canadian, all market index as well, it has also outperformed the S&P 500, the Nasdaq 100. So let me just go to year to date for TD. You can see, yeah, well over 30%. Just shy 10% shy of 40%. I thought. I think you pull back. So and we've seen that even when you thought the trade tension between the US and Canada would have actually impacted, major systemic players in Canada like TD. It hasn't really done much because Canada is claiming that they have actually diversified their trade relations beyond the US, and it is yet to be seen. And I said it's also momentary, so investors investors shouldn't necessarily try and say, oh, we don't want to invest in Canada, we don't want to invest in Canadian stocks or Canadian companies. I think it's just something that, after this administration or in the next couple of few months, if President Trump actually sees that he's not getting what he's actually looking for, it might actually further de-escalate, and not, escalating every time. Yeah.
Thank you for that insight, Sam. Another headline that caught investors' attention, apart from the U.S. trade, Canada trade tensions, was actually Nvidia recently,
Yes.
because we saw Nvidia reignite the AI stock rally with a huge growth forecast.
Yes.
Could you take us, just run us through the Nvidia earnings, really?
Yeah, Nvidia really, came out with a blockbuster. We use that word at Stochastic blockbuster because it's just very similar to when you go to the cinema, you want to watch maybe James Bond, maybe Star Wars, some of those major big ticket films. That was how Nvidia's earnings was actually anticipated on Wall Street, and Nvidia actually performed as expected and even beyond expected. So on the low end, the market was actually expecting between 90 billion to 92 billion, but Nvidia actually did the upper end of the forecast, which actually beat Wall Street estimates of about 96 billion. Nvidia is also having a guidance for the next quarter. For the first time, Nvidia will actually be reporting in the tune of about 108 billion dollars in quarterly revenue, which is the next quarter, Q3. So that is not just remarkable, it is something that is out of this world. And the market has really, really reacted positively to Nvidia stock. I'm just pulling up the chart now on stockatip.com, as you can see. So you saw that every rally. So let's just go to the 1 month chart. You can see the every rally. The pullback was very, very strong when Nvidia went as high as low as $190 per share, and the stock has really, really recovered strongly. It's now trading. We had a pullback. Today, just about 4%. Nvidia is down by 4% today, but yesterday it did almost 10%. It pared down by back to 8% when the market actually closed. So Nvidia really, really has changed the game of play. That the AI infrastructure build out, Nvidia's GPUs, and Nvidia's business is not necessarily seeing strong competition from its peers like the AMDs and a few other, chip makers. So yes, Nvidia has really, released the blockbuster result, and also Nvidia is also investing. So I'll go to that news because what happened is Nvidia did not just release that result. Nvidia also said they will be, acquiring Hugging Face. Hugging Face is actually an AI training platform that the AI model makers are actually using for a whole lot of training and all of that when developing this AI model. So it's a $12.9 billion deal, according to reports. Is actually going to give NVIDIA stronger play in the open source AI ecosystem. And Hugging Face has become the most important platform for AI developers, like I said, hosting vast collection of open source models, data sets, development tools, like I said, training and all of that. So NVIDIA has the GPUs, and NVIDIA has Nemotron, which is NVIDIA's open source platform. So it's just a match, a very, very strong match for NVIDIA to actually acquire this Hugging Face startup, which is actually very, very strong in what they are doing. So NVIDIA has not immediately confirmed this transaction, but Reuters actually said, it is likely that this deal will go through. Kenny.
Thank you for that insight, Sam. Um, to ask you something more personal, we saw Nvidia triggers a rally in the AI sector, and before this rally, there have been fears of this apocalypse. There's been fear of you know, the AI sector gulping too much investment and not showing enough
Yes.
for it. Yeah. So I would like to ask you, with Nvidia's rally and Salesforce and CrowdStrike triggering a software stock revival, would you
Yes.
say that the SAS Saskapolis is dead?
Yeah, so actually that was what Mark Benioff, CEO of Salesforce, actually said, that Sarsaparilla is actually nonsense. And he's saying that because Salesforce itself was actually one of the victim of the AI bubble fears. Just hold on. Okay. Yeah. So Nvidia itself, Salesforce itself, has been a victim of, the AI bubble fears. That AI is not necessarily going to change anything particularly, and that AI companies are not going to be profitable. And also, the argument shifted from the fact that AI is not doing anything remarkable to the argument that AI companies, or frontier AI model companies like Anthropic, like OpenAI, are now going to take over the business of the legacy software companies who are also investing in AI and modernizing their services by AI. So you saw the likes of Salesforce, even Palantir, for instance, which is an AI company by design, by action, by operation, actually saw more than 40 to 45% drawdown in their shares. You saw the likes of CRM, which is Salesforce itself, over 40%. You saw ServiceNow, ticker symbol now, I know, November Oscar Whiskey. You saw them, trailing very, very far behind. I'm going to just go into those charts so that we can even see the scale of uh, how far. So if you check Salesforce on Stockerteam.com, so just like I said, Stockerteam.com is a platform for any retail investors to do research, to do real-time analytics, and you are able to actually analyze stocks. So feel free to use any of these charts, and you can actually search for any stock globally. So let's look at this chart. Can you just walk with me? So if you look at the year to date for Salesforce, which is now CRM, ticker symbol CRM, you could actually see that Salesforce has just broken even in the last, uh, you know, 8 months or thereabout. Salesforce just gained 1.6%. In fact, if you want to check the scale of the sell-off for Salesforce's, stock, even in the last 1 year, it's just barely 1%. But if you check the last 6 months, let's check the last 6 months. You could actually see that the stock really, really struggled. So in the last 6 months and in the last 1 month thereabout was when Salesforce really, really started picking up, and the stock has now gained over $56, and it is now $256 per share. But if you check the remaining beginning of this year towards just a month ago, Salesforce has really, really suffered greatly. But we've seen that stock, recovering very, very seriously. If we go to ServiceNow, which is ticker symbol now, you could actually see that it's almost the same story, and that's the story that the Satsupocalypse idea, which really the likes of Michael Burry, who is a very, very renowned or popular short seller, he has actually shorted a lot of software stocks because he believed that the likes of Entropic is going to take their, it's going to be eating their lunch. So, but the story has changed, and you could see that even ServiceNow, which if you check year to date, you will actually see when the stock actually struggled. You could actually see that massive drawdown in April. The stock went as low as $83 per share. In fact, when the stock even went back up in June to $133 per share, it actually further even went down further down around July to $91 per share. So now, if you check the last 1 month, you could actually see a very strong recovery, and the stock has done 24%. So Saspocalypse seems to actually be taking the back seat. I think the legacy software companies are now very, very, very aware that they know what they're doing, and investors are now very, very confident that they can make more money even with AI. So today, the 28th of August, 2026, we are very happy to do the closing bell on Wall Street. It's a very, very remarkable day on Wall Street. But we saw what happened today. Kenny, I'm going to come to you as well because you are the one driving the show. But the market has closed today with Nvidia actually pulling back by 4%. But the rally yesterday was very, very remarkable. But there is also a bigger story to why the market actually ended negatively. Before I hand it over back to you, I think one of the major reasons the market went negative today was because of the statement by the Fed chairman, which I'm going to come to. So, but before we go to the Fed chairman's statement, what exactly have you seen this week?
Thank you, Sam. I was going to, ask us to deviate a little from the U.S. stock market and go to the Nigerian stock market because we've got bumper news in
Exactly.
that market too. So
Yes.
just was it Thursday or Wednesday? We got news that the FTSE Russell
Yes. I
has
will put that
moved
up now.
The Nigerian market from unclassified to a frontier market status, and that will be
Yes.
effective from September 21 of this year.
Yes.
What do you think,
That
Sam?
exactly. That's very, very massive for the Nigerian economy because if you check what has been going on in the last 3 years, it's been very, very positive for the Nigerian market. Yes, the reforms actually came with a lot of pains for the average Nigerian. The cost of fuel, which is called petrol in Nigeria, actually went up. Transportation went up. Food items actually went up, and you saw so much more complaints and pains from the general public, cost of living and all of that. But we've seen that on the back of that reform, we've seen more positive feedback from the global economy, investor community, the business community, because now the naira is now very stable. In the last, in fact, let's bring up the USD NGN, which so you can also search for any currencies on stockatm.com as well. Let's bring up the USD NGN and we will be able to actually see what exactly. So this is a chart that shows the dollar versus the naira. We've seen that the naira has gained over 12%, which means the dollar has actually lost over 12%. So if I flip that chart, I'm just going to go back and I'll flip that chart to NGN USD. And we should be able, okay, we couldn't get that. I'll just go back to the main chart and we could actually see that in real sense, in the last 1 year, the Naira has really, really gained very, very strong momentum, even when the Naira is still down by a whole lot. The Naira is really down by a whole lot, but we could actually see the steady stability it's actually trending down on the positive side, not necessarily trending up on the negative side. So this is the naira gaining against the dollar, and if you check the last 1 year, you could actually see that the naira has not just been stable, is really gaining against the dollar. What this means is that the likes of FTSE Russell, which is the index that actually allows global investors to invest in emerging markets, global markets, different regions, has now said they will had Nigeria back to the frontier market. Although the frontier market seems to be the first step that makes you investable for global investors. The next step is the emerging market. Then you have the developed market. So, but emerging market is where Nigeria wants to actually ultimately be, because Nigeria economy is actually classed as an emerging market. But because of these reforms that has now helped us to enter the frontier level, I think the emerging market level is actually the next level that Nigeria will be looking at. But the frontier status is very good. It means index funds, global investors who actually want to invest in funds and companies in the frontier market will now have to actually had Nigerian stocks, and we've seen today, before the closing bell on the NGX, we've seen some NGX names. Let's look at First Old Co, which is actually a very, very interesting bank that has really, really been making waves in the last 6 months. In fact, let me just go back year to date. I think I should be able to get the 1 month start chart if that is correct. If that doesn't show us correctly, but today alone, we can actually see now that First Holdco actually did over 7% gain. We saw Seplat, which is an energy giant out of Nigeria that is also listed on the US on the UK stock market. Pardon me, between today and this week so far, or today, basically did over 10%. And we've seen on and on and on, even when we've seen some drawdown in the Nigerian stock market for the past couple of I think about almost 2 months now, we've seen some very, very considerable pullback, but the market is still the most best performing market after the Korean market. But in terms of dollar return, the Nigerian market is actually the best, best performing. So from what FTSE Russell is doing and what they are saying about the Nigerian, market, now adding Nigerian to the frontier status, I think it's a very, very net positive for the Nigerian stock market. Yes.
Thank you, Sam, for that insight. Another major news that I would like to touch on that made the rounds earlier this week is that OPay is considering an NGX listing. There's been a lot of noise in the Nigerian investor space, a lot of discontent about people thinking or people not being happy with OPay
Yeah.
just opting to the list in the UK alone. But we now have news that OPay is considering listing on the Nigerian exchange. What does this portend for investors in Nigeria and NGS at large?
Yeah, so I think the story of OPay is quite remarkable. So this company, which is majorly owned by the company behind Opera Software, Opera Software actually owns a major stake, and we also know that Masayoshi Son's SoftBank also invested in this company alongside some other institutional investors out of China. So OPay started in Nigeria. Around 2013 or about 2014, 2013. They started as a ride hailing, for motorcycle. From there, they went into tricycle. Then later, they moved the app into a fintech, and now they are the biggest fintech or the most valuable fintech out of Nigeria. Over 60 to 70% of their business is actually done in Nigeria. So when they opted to list on the US stock market, just point of correction, it wasn't the UK. It was something that a whole lot of the Nigerian investing community and the capital market, they weren't necessarily unhappy about it, but they actually felt that if this business is technically a Nigerian business, it should actually be participating in the Nigerian capital market, irrespective of wherever it is actually trying to list primarily. So, but the business of OPay has really, really been strong. One thing that investors need to be aware of is that yes, the business is strong, but OPay is still a fintech. They do not necessarily have a full-fledged banking license that allows them to compete with big lenders like the GT Co, like the First Co, like Zenith, like a few other multinational or international banking giants out of Nigeria, like Stanbic IBTC, or even the UBA, United Bank of Africa, or Access Bank. So, but their business really has been very strong. So the company actually started in Nigeria. Backed by SoftBank, like I said, they've raised over $400 million so far, which much more money has been invested into the business. If you see their numbers, according to OPay, in one of their recent report on this article on, on Stockatom.com. Feel free to read all of these articles. They are very, very informative. OPay said they processed over $358 billion in gross transaction value in 2025 alone, which actually more than double what it did in 2024, which was about $166.2 billion. That is quite remarkable for a fintech to actually be doing. It means OPay has overtaken the likes of Flutterwave, the likes of Paga, and also Paystack, and they are the most valuable fintech. So it was a positive news because now that they've actually now decided to consider to actually list on the Nigerian stock market, it's going to deepen participation, it's going to deepen liquidity, it's going to actually deepen the diversification and the depth and the complexity of the market, complexity from a very, very positive point of view. So that's exactly what OPay has now told or has hinted that they're going to be doing. Kenny.
Thank you for that insight, Sam. You were talking about First Bank, First Old Co, and how it has
Yes.
extended its rally,
Mm.
remarkable rally, I would say. Another stock that caught my eye during the week, although not in the NGX now, is CrowdStrike in the US
Yeah.
stock market.
Yeah. Ticker
Did some
symbol
numbers.
Charlie Romeo Whiskey Delta. Yeah, I'm bringing that up. So, CrowdStrike is really, really a remarkable company. And for the information of our viewers and some of our users on Stockatom.com, CrowdStrike, we recently added CrowdStrike to the Stockatom index, which means we have actually added it to the portfolio because the index now actually tracks the portfolio. We've seen CrowdStrike has done remarkable numbers. As at yesterday, I'm just pulling on the chart. CrowdStrike did well over 14% as of yesterday, or almost 20%, because you paired that down today because of how the market has gone. But if you check year to date, you could see that at the beginning of the year, this stock actually struggled very, very strongly. And why? Because Anthropic earlier this year said they came up with a model called Mythos AI, and Mythos was actually one of their, perhaps, I think perhaps, according to the company, is the most powerful AI model that the company has ever made, and they are claiming that it could be the most powerful out there in the market. And what Mythos was able to do is to find vulnerability in a code, is to find problems, fixes that needs to be done, loopholes in a code. That means that on the other side, it means Mythos can be used to do cyber attack, AI-driven cyber acts. So that really, really piqued the interest of the global market, and they felt, okay, is CrowdStrike now going to be getting a strong competition in the person of Mythos or Anthropic? And we saw a lot of cybersecurity stocks sold off from Palo Alto Networks to CrowdStrike itself to Rubrix to many of those cybersecurity stocks. In fact, let me bring up Palo Alto Networks, and you'll be able to see the scale of that sell-off. Actually, Palo Alto Networks is ticker symbol Papa Oscar November Whiskey, and you could actually see what we're talking about. So, if you check, year to date, you could see that exactly the same thing that happened to CrowdStrike in the first 5 months of this year. They have actually struggled so badly. But look at something. Year to date, now, Palo Alto Networks, which is a major mega giant in cybersecurity, is actually the second biggest cybersecurity company in the world after CrowdStrike, has now done over 107% year to date. So the recovery has really, really been remarkable for Palo Alto Networks. The recovery has also not been too bad for CrowdStrike, but we just felt like because CrowdStrike is highly, 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 premiumly is priced, not priced for perfection, but it's actually a premium stock. And so you do not expect CrowdStrike to move too fast, but you could actually see that CrowdStrike year to date has done over 92%. It's a very, very remarkable recovery from CrowdStrike and Palo Alto Networks, and that's supposed to tell you that AI is not necessarily going to take the food off the table of the legacy cybersecurity companies, legacy data analysis software and AI companies like Palantir, like Salesforce, like ServiceNow. AI is going to only make them stronger and more respected because they have they have the domain knowledge, they have the infrastructure layer, they have the client relationship, and that's why tomorrow we are having a day with Destiny at Stocker Team. We are having a second quarter review for all our investors. We will drop the link to the meeting on this video. We'll make that on YouTube. We'll drop the link to this video. It's going to be happening 7:30, GMT +1 or British Standard Time, or whichever time zone you are. So please check. We'll be dropping that link to this video. You can join us tomorrow. It's going to be very, very rewarding because we are talking to our Stocker Team members and also everyone that's following what we're doing. Kenny.
Yes, thank you, Sam. You talked about the Fed chair, Kevin Wash's
Yes. Yes.
yeah, the Fed chair. How does this speech? How did it affect the markets today?
Kevin Watch, is someone who is not much of a talkative, not necessarily from a negative point of view, and not necessarily like the previous, Fed chair was much more of a talkative. No, he was very, very astute. Well respected, intellectually driven and mobile. But Kevin Walsh doesn't say too much. Jerome Powell, who was a former, Fed chair, was a bit more charismatic. But Kevin Walsh, I think, is still is a very young, person for that position. But he said a whole lot today that actually really, really, jilted the market. And a whole lot of people who actually thought Kevin Walsh might actually be dovish, which means it might be lenient with interest rate cuts or hikes. I think they've actually gotten the message now that this here is a man of a mission and we should be listening to him. So on Stocker Team, we actually looked at the 5 key takeaways that investors need to be aware of because we saw the market really, really went on a negative downward trend as soon as he mentioned all of those plans and what exactly the market should pay attention to. So we actually came up with 5 points, and the first point we mentioned was that investors actually need to know that inflation is now the biggest problem for the Federal Reserve. The most important message was that Federal Reserve is not satisfied with the current inflation picture. Wash also said, the Fed needs to be confident that the underlying inflation is moving backwards towards 2%. So inflation is not moving back to 2%, and the Fed is not really happy about that. We've seen that, personal consumption expenditure, which is what the Fed actually used to measure the real impact of inflation, is over 3%. As a matter of fact, about 3.7% annually. So this is not really where the Fed wants to be. What does this actually mean for investor? So for investors, rather, the market is open for a more predictable path. But Wash comment actually suggests that investors should be careful about assuming that the next move in rate will automatically be higher, be lower, rather. So you should not be expecting that the Fed is going to cut rates. And if the Fed is not cutting rate anytime soon, so the growth stocks, the tech stocks, the mega cap tech stocks, the Palantir, the Nvidia, the CrowdStrike of the world, small cap stocks, high leverage companies, long duration bonds, real estate are actually going to see some drawdown. And some investors might actually go defensive, like into utilities, into the oil sector. We've seen what oil has done this year. Let's even look at the Brent crude. You can also search for commodities. You can search for commodities on stockatm.com. It could be oil, it could be gold, it could be silver, it could be even different types of crude oil. So let's look at what Brent has done. You can see that Brent has done over 30% this year. No thanks to what has been going on in the Middle East. No thanks to President Trump's escalation to de-escalate, which is not working, and it seems like the US is now in a fix. So the Fed really, really is not happy with the situation of things, and inflation is not really going away anytime soon. And so, as investors, you just need to have your strategy, and that's what we'll be discussing tomorrow. What exactly is your strategy as an investor to be very, very certain in an uncertain time, to be very, very resilient in a very, very shaky time, like what we have now. But we've actually seen that even when inflation is a bit still too high, tech stocks are actually much more resilient. So do you want to actually hold your position for the medium to long term? Do you actually want to have some defensive position? These are the things that you need to actually consider as investors. I will be discussing more tomorrow. Kenny.
Thank you for that, Sam. To wrap up, we at Stockholm will have a Stockholm League that I would like you to throw more light on for investors.
Yeah. So also check your audio as well. Yeah. So the Soccer Team League is actually the first of its kind globally, and also targeting investors in emerging
Did you
markets
get that?
in Africa.
Market
Yeah.
league, please.
Yes. That's where I am. I just check your audio as well. So the Market League is actually a fantasy investment league where you do not pay anything to play. You do not actually have to give out anything of monetary value to be in the Stockton Market League. The league will be happening full scale starting from 21st of September, but entries are now fully open for all investors, retail investors, anyone who really, really wants to learn on how to pick winning stocks. This is not financial advice. This is not a plan on how you can invest or maybe choose the stock to actually spend money on. We do not offer investment advice. We do not actually guarantee anything to anyone. It is a fantasy league for investors to actually play in partnership with a major Nigerian broker and their partners. Investors will actually have the opportunity to choose a minimum of 5 stocks they think that is going to do well based on their research, based on their own understanding, and the key is in the lock it in. And once you locked in, you will actually be queued for the main contest, which is going to last 1 month, starting from the 21st of September. So just go to now to stockatm.com/market league, and you should be able to put in your entry within 2 to 3 minutes, just a few. You put your email, your name, your stocks, the stocks that you actually want to pick, and you submit, you locked in, and you'll be on the queue. You can see the leaderboard. When the action starts on the 21st, we are going to see the best of the best, thinkers who actually want to actually understand how to invest for the long haul. And I think Market League is an opportunity for everyone to learn on how to be a better investor. Thank you, Kenny.
Yes, thank you. So thank you, Sam. Thank you for running us through the U.S. stock market and the exchanges as well. Um,
Yes, so it's been an eventful day.
I think we've run
Uh,
we've run through.
yes, we're out of time already. We're out of time already. We are very happy to have this episode today, Friday, the 28th of August, 2026. Kenny, thank you so much for anchoring today's edition. Next week, we'll be scheduling several closing bell edition, but we'll actually let everybody know. And we're also inviting everybody to tomorrow's event, which is going to be eventful, the Q2 review for Stalker Team members and Stalker Team followers. Thank you so much. We'll see everybody tomorrow at the event. Take care. Keep investing. Keep growing. Take care. Bye bye.